Dear viewers, in this video you will learn a guaranteed sure shot way to profit from the stock market without doing any research and all. You might be surprised how that is possible. No need to believe my word. Watch this full video without skipping any part. You will yourself believe it. If you want to listen the same video in Bengali, বাংলার জন্য আপনি এই লিংকে ক্লিক করুন, এই একই ভিডিও আপনি বাংলাতে পেয়ে যাবেন। But yes, whatever I'm saying that the sure shot guaranteed way to profit, I'm not talking about 1 month, 3 months or 6 months profit. I'm talking about profit over long run, over 2, 3, 4, 5 years. I'm Prashanjit Pal, author of the best-selling book How to Avoid Loss and Earn Consistent in the Stock Market, and also actively investing in the stock market since 2010 and achieved financial freedom. So let's start the video. Everyone wants profit from the stock market, right? But so many people struggle to earn profit from the stock market. In this video, I am not going to share any intraday, short-term, swing trading profit, because believe me, intraday is one of the sure shot way to make loss in the stock market. Across the world, out of 100%, maybe 1 or 2% are earning profit in intraday, but they are earning because they have an experience of 20-30 years, they have a huge system, they have huge net worth and all. But for remaining all other investors, I'll suggest if you want to earn money in stock market, avoid this intraday. Okay, so what's my process? The process that I'm going to share you in long run. See, if you invest in a fundamentally strong company, then many people say that over long run that you will earn profit. Yes, that's true. But the only issue is you also need to track the company. You need to track the quarterly result. You need to track the news, the views and all other things. What if now many people, those who are involved in another profession or business, for them the tracking might have been proved difficult, or every individuals may not have enough in-depth knowledge to track these companies, to do fundamental analysis and technical analysis and all. So this video you'll get the solution how without tracking, without any analysis, still you can earn profit over long run. What's the process? See, what if you have an option to invest top 50 companies in India. If you can invest in top 50 companies, then what happens? See, one company or two company, one particular sector might suffer loss due to any reasons, but the top 50 companies together, they can't, at a single point of time, they can't keep doing loss over 2, 3, 4, 5 years. So many of you might heard the concept of Nifty 50, right? So what is this Nifty 50? Nifty 50 is nothing but an index. It is a collection of top 50 companies in India. These 50 companies are across different sectors, be it many companies are from IT segment, many are pharma segment, many companies are from like banking segment, chemical segment and all, paint segment and all. So if you invest in all these 50 companies, then indirectly you are investing in India. Now one big limitation of investing in all these 50 companies, say for example, Reliance itself is available at around 2000 rupees, right? So if you want to invest in all these 50 companies, you might require few lakhs of rupees. It's not possible with some few hundred or few thousand of rupees, right? Because if you want to invest in 50 companies, you will require a large capital. So this is why there's an alternate, there's a great instrument which is called Nifty 50 ETF. What is this? ETF means exchange traded fund. Okay, so what this Nifty 50 ETF do? They simply collect money from various investors, they pool the money, and then this pool invest in the all Nifty 50 stocks in the equal proportion. And the best part of this, like whenever a company underperforms, like over a period of time, you might already know that the Yes Bank was once a Nifty stock, but as Yes Bank underperforms, then what happened? Automatically Yes Bank excluded from Nifty 50 and some another quality company included in it. So in short, if you are investing in Nifty 50 ETF without your research, without tracking, automatically these non-performers like Yes Bank, they automatically non-performers will exclude and good performers will come into the Nifty 50 ETF. Now, if you don't know anything about the share market or new into the share market, I'll show you very quickly how you can open a free trading and demat account, and how you can with live, I'll show you live how you can buy yourself this Nifty 50 ETF. So let's have a look at the screen. If you don't have any demat or trading account, just click on this link given in the description box. This page will open, and where you can open a completely free of cost trading and demat account from Angel Broking. All you need to do, you just need to put your name and then your mobile number and then OTP and all, and after that it will ask for the bank account details, and then if your Aadhaar card is linked with your mobile number, then within half an hour from your home itself your account will be open, and then after opening the amount you can invest in Nifty 50 ETF. Now what are the Nifty 50 ETF available in the market? See, this is HDFC Nifty 50 ETF. You just need to search and the price chart will come. There is also Nippon India Nifty 50 ETF. There are many others like SBI Nifty 50 ETF, UTI Nifty 50 ETF, but you can invest in any one because all of this Nifty 50 ETF offer similar return. Like here in the Money Control website, this is Nippon India, means Nifty Biz. If you look at the return, and here is the HDFC Nifty 50 ETF. Here in HDFC Nifty 50 ETF, if you look at the return, if you compare the return, like in 1 year return 80%, 5 year 105%, annualized 15. So in Nippon also it is almost similar, like 5 year 104%, 1 year 80%. So you can choose any Nifty 50 ETF. It's as per your choice because all this Nifty 50 ETF offer the similar kind of return. Quickly have a look how you can buy or sell. See, this is my angel broking account. So you can sign in, or you can sign in from any account of your choice, be Zerodha, Upstocks or anywhere. See, the process is almost same. From here, let's visit to market, and then you will get an watch list. So from in watch list, you need to simply add the stock first. Like in HDFC Nifty 50 ETF, this is the NSE code. So you just need to copy that code or just need to write the same thing. If you write the same thing, the stock will come, and all you need to do is you just need to add the stock in your watch list. Similarly, like if you are looking for this Nippon Nifty Biz or any other stock, that's same. So in Nippon India Nifty 50 ETF, again, this is the code, and again, if you write the same code in the angel broking watch list or in any other watch list, be it Zerodha or Upstocks, wherever, you will again add the stock in there. The same process is applicable across the brokerage. Now, if you want to buy, simply select the HDFC Nifty 50 ETF, click on the buy button, and once you click on the buy button, this page will open. Now first you need to mention the quantity. You can put any quantity, like be it 10 quantity, 5 quantity or any quantity as per your choice. Then put the price, like current price is 155.50, so you can put 1.5.5. Then disclose quantity, no need to put anything. In validity, keep it day. In product type, delivery, intraday, margin, always select delivery. Intraday means you need to buy sell on the same day. Margin means investing on borrowed money. Then you need to just submit it. Once you submit, the buy order will be executed. Hopefully by now you realized how easy it is to buy or sell Nifty 50 ETF. All you need to do is every month, be it the 1st of the month or 15th, every month you can invest any amount, be it 1000, 2000, any amount every month in this HDFC or Nippon Nifty 50 ETF, this Nifty Biz. You can keep investing every month. Keep doing this for a period of 2, 3, 4, 5 or 6 years. The longer the better. Then I am sure that you will at least generate higher return than the fixed deposit. Why? Again, the reason is very simple. You are investing in Nifty 50 ETF, although you are investing only 150 or 200, whatever it is, ultimately you are indirectly investing in all the 50 companies, all the top 50 companies in India. If by any reason this Nifty 50 ETF generate negative return in the coming 5 years, it will mean the entire Indian economy will collapse. There might be a job loss, like all these big companies like TCS, Reliance, Infosys and all, they might collapse, because unless and until they collapse, Nifty 50 ETF over a period of 5 years won't generate any negative return, right? So on a very unlike scenario, like in the worst possible case, the percentage is very, very less, almost nil. If that happens, then I'm scared, because the multiple companies might sack their employees, your salary might get reduced and all. So chances of that is very less. Indirectly you are investing in the top 50 companies in India, and that's how you can earn money without any research, without any tracking, without doing anything. Because automatically, if a company is a non-performer, if a company won't perform over a period of 2, 3, 4 years, keep making loss, then automatically that company will exclude from the Nifty 50 ETF, and a better quality company includes over that. Now share your comment, and obviously if you like the video, make sure to click on the like button and share it with your friends and family, WhatsApp, social media or any other social media site you want. If you want to receive similar kind of videos in the upcoming days, just click on the subscribe button. I'll come with another insightful video, but if you won't subscribe this channel, you won't get this video. I hope you like this video. See you in the next week with another free insightful video. Till then, happy investing.